Yeah, we got quite the show. We got a bit of a fake out after the FOMC yields moved yields in the US lower. Risk on assets started to move higher. And it seems like it was a fake out. Man, and I'm not the only one bringing this up. We got a little clip here from a show I love to watch. Go ahead and pull it out. There's some other commentary on this as well, but I'll pick that little piece. Before we get into the main topic of the stream, though, I'd like us all to bring our attention to this headline here and say hi in the chat. Chat's on the left-hand side. And I'll start a poll here because this layout is different than how I used to do my streams. Do you like the new layout? All right, we'll see how that goes for the rest of the stream. And maybe we'll do some other poll going into some of the market topics that we'll be discussing. So, a while back, I first covered the UAW stuff very, very early, like a month and a half before the UAW started really gaining momentum in that 1 or 2 weeks where they were going to start to have those votes on strikes at the big three automakers in the US. And I first learned about that actually from some Moody's research that I had. And so I was like, oh, what's going on with this strike thing? I need to do some more research into it. And so then I read some Reuters stuff and whatnot. It's about doing, when it comes down to markets and whatnot, you really have to be on top of this stuff. You really have to go out of your way to consume as much as you can within a reasonable time. So then the information you have, isn't outdated and covers a wide enough net of what's going on in the world. So then you're just aware of the type of risks because markets represent part of the real world to an extent. Some people would contest that markets represent the real world. But you know what? They do represent something. They represent a whole lot of money. Anyways, the whole point of this little story is the research process. So I got on that research process for the UAW real early, live on these streams. And I was saying for weeks, hey guys, pay attention to the UAW, pay attention to the UAW. And also during the same time, I started learning more research about freight to the United States, to China, because during COVID, I had learned about all the freight economic metrics because all the supply chain analysis was being done to see where markets would end up going during 2020. So I learned quite a bit about it. I learned the lingo. And then this stuff about Panama around the same time as the UAW strike started getting some wind. This stuff about Panama and El Nino started coming in. And that El Nino, by the way, is also affecting China quite heavily. Like they need to import more food now. There's a lot of crops around the world that are kind of getting devastated due to a pretty big drought. And one of the places impacted in the world today by this drought is the Panama Canal. Now, in the Discord, I've been going over the Panama Canal research that I've been finding. And if I bring up the Discord real quick, I'll show you the current thread that I have on it. You'll get to see this is the daily plan stream that we have also in the Discord. This is the Panama Canal drought thread. So we have some stuff here from late October. This thread was made a long time ago. But since we moved to this new research forum where you can find all these topics, And if you want to find this, you can go to research forum and then hit this little economics tab. And the US federal budget stuff is showing up here, the Panama Canal drought, the UAW worker strike, and actually a little update. It looks like it's probably ending. The US federal budget, actually there's a podcast that I mentioned here in this thread that I'm going to be sharing with you guys here. I'm not going to play the podcast, but I am going to make you guys aware, like, hey, this exists. It's a really good summary of what's currently going on in the US government fiscally. Consider, listening to this podcast. But I want to bring more attention to what's going on in Panama because I don't think it gets enough attention. You can watch all this stuff here when it comes down to, hey, what's currently going on in Panama? Why is it important? Who does it impact? It mainly impacts the United States, and it will probably lead to far more significant pricing of inflation. I think inflation in the United States might be underestimated if the issues in Panama persist. So, real quick, Panama Canal to have daily sailing this winter due to drought. Rainfall levels are down by 1/3 this year, hampering the ability for vessels to move through the waterway. Let's see here. Do they give a particular percentage? Yeah. The Canal Administration. Oh, they got a whole little video here. Yeah, this is... Go to this article, watch this video. I'm not going to play it because, it's 10 minutes long. Let's see here. For the first time, there's no wind thrust across both sides of the canal. They are static and there is no rain. Okay, that's not great. Let's see here. Oh my God. Yeah, that is huge inflation. We've seen offers by propane carriers of $2.4 million for one transit, with the normal transit being around $500,000. Hey, yo, I see you. Yes, BBT did a video, and I did post that in the old Panama Canal thread. Real quick, if I go to the old channels. Actually, no, it's under I think it's under geopolitics. Oh, yeah, here it is. Yeah, so this is where I first made this old thread in the economics section. What's that? September 15th. That's roughly around the same time I started talking about the UAW protest. Yeah, drought in Panama. And see, there's the Patrick Bet David video on the Panama Canal. I posted that as soon as it came out. So no, when I say I've been on this for a while, I've been on this for close to an entire 3 months now at this point. Just staying on top of it, watching this progress. And this is getting progressively worse. This will impact the United States and potentially result in upside surprises. Like, why hasn't this impacted the United States so far? Well, there's actually a bit in that Panama Canal drought thread. Let's see here. If I expand this, let's see here. Food supplies were not adversely affected. Food, which is a big part of the inflation. More so retail items. Most of our food comes from the region and the US, Latin America, South America. Goods that would normally take 4 weeks to arrive at our shores have taken 3 months to get there. So food isn't super impacted, but goods are. And as you go through the holiday season, I mean, look, a relatively good thing economically speaking is that demand for goods is slightly impacted. And that's one of the reasons why recently the US manufacturing PMI just took a dip, right? When manufacturing PMIs take dips, that's not necessarily good sentiment for goods. And the fact that this is mostly going to impact goods is actually relatively okay. It means that while the demand for goods is going down, the price of those goods might end up staying the same because the inflation for those goods is still rising due to some onset effects slightly from the Panama Canal price is going sky high, because who is going to foot the bill for this sort of thing here? This, we call it 2-3x increase in price to ship stuff through the canal. That all those costs are getting passed to the people who are loading things onto the ship. And then it's not just that these carriers are getting more expensive. It's that they're also loading less cargo. That's why they're getting more expensive. Booking slots are now crucial, and non-booked vessels may face indefinite delays. Really, really not good. On top of the water crisis, Panama has been hit by protests over its mining rules in recent weeks. The protests have resulted in road closures in key areas of the country, and while there have been no major disruptions in the canal's operations, Wilhelmsen warned that this could change if the road blockades intensify. We are preparing for potential delays and missed deliveries of spare parts, as well as disruptions to crew movement if the protests continue in the coming days. Oh. So there's extra political risk on top of this. Okay, thank God I read this. Yeah. This is just something to watch out for. This could have similar impacts on economies as the UAW. And also understand that the UAW protests, the UAW strikes, are not technically done yet. They are in tentative agreements with Ford, Stellantis, and GM. They are all in tentative agreements. And I can bring up the research thread that we have on the UAW here. See, look at this video. Tentative agreement with GM. Tentative agreement with Stellantis. And tentative agreement with Ford. This was over like the last week or so. And again, there's another older thread on this. I've been watching it much longer than October. You can just go back and watch old streams where I was like, hey guys, there's this thing we should probably be paying attention to. Yeah, it's better to be early and on top of your research to developing risks that aren't totally risks yet. So that then if they begin to materialize and realize themselves, that you know, generally speaking, what are the next one or two things you should already be focusing on. It takes a mental load off. Like, hey, if this were to happen, what theoretically should I be doing next, right? Under what assets and what sectors and what companies would this particular risk impact the most? You get to ask those types of questions, and you have this extra lead time because you're on top of your research and the risk hasn't totally materialized yet. So it's good to stay on top of these things. Actually, you know what? There was there's a video that I recently posted in the resources channel. This guy here.
So
the title is called Making of an Investment Banker with Jim Donovan. And I think one of the pieces of advice he has in here is you have to read the Wall Street Journal every day and at least read 3 articles.
Every single day. 3 articles from the Wall Street Journal.
Oh my God, perfect timing on that.
2 things you should do in the interview. Prior to the interview, All of you should be reading the Wall Street Journal every single day. Read the Wall Street Journal every single day. 3 articles from the Wall Street Journal. 1 article on a macroeconomic topic like inflation or interest rates. 1 article on a specific industry, company, or transaction. So for example, a recent merger transaction that's been announced, or a recent IPO that's been announced, or a company that's recently announced earnings. There'll be an article about whether those earnings are good or bad and why. 1 article on a specific company, transaction. And thirdly, an article from the op-ed page. 3 articles every day, no matter what, no exceptions. It'll take about 15 minutes a day. It's not hard. If you do that, you'll be amazed at how much you know, how much you've learned after 6 months or 12 months. You'll be amazed. You will know an incredible amount substantively after 6 months or a year. You will also, by the way, begin to decipher the jargon that we use as investment bankers, the jargon that we speak in, and that will help you in your interview and in your job.
I love being right. Or right as frequently as I possibly can be. It is good. It is good. So let's move on to the next topic. This is the podcast from Charles Schwab that I recommended listening to when it comes down to learning. If you want probably one of the best explanations on the current situation in Washington as far as the fiscal negotiations are going, this is the best one I've got so far. And you listen to this at 1.5 or 2x speed. I've moved from listening to things at 2x speed to 1.5 times speed, because I find even though I can comprehend things at 2x speed, I find out my comprehension really goes up just doing 1.5x speed. And 1x speed, sometimes the guys talk too slow. It's just like my brain wanders off because I got all these technology bits in front of me. It's, you know, if I was running and out on a walk and listening to them 1x speed for sure, but you know, I'm working, I'm getting things done, I'm trying to go through research, go through a few podcasts here. Let's go ahead and do 1.5 times speed. And I find that's kind of like a good sweet spot for me. But yeah, 21-minute podcast, check it out. Linked to it all in the Discord. Go ahead, hop on in. Go ahead and party pop for that. There you go. Let's see here. So far, how has the poll gone? 2 votes. Do you like StreamAll? 100%. Thank you for the 2 votes, you guys. All right. Next one. Oh, this relates to the title of the stream. So there's this section right here. And that actually relates
The interesting thing for me
to how price action has moved so far today. So, you know how after FOMC, we've rallied, right? Like on gold, bring up the DXY, you know, the dollar fell, and everyone, you know, I was like, you know, the poll from yesterday was, is the dollar going to be bullish, bearish, or neutral post FOMC? It was 60% neutral, 40% bearish, and 0% neutral. And if I could have voted, I would have done bullish. So I would have had my expectation was totally wrong here. The guys who were here at yesterday's stream and bearish were totally right, and they were in the minority. But the reason why this happened is because of yields, the yields. So if I go to US 10Y, the yields just plummeted after Powell came out. And even though he gave hawkish commentary, the markets moved as if it was dovish. So right now, the commentary over literally maybe the last 6 hours that it's been coming out from just a handful of guys. You know, it's not super wide commentary. I mean, the video I'm about to show has maybe 2,000 views. Again, it's out over the last 6 hours. I know my stuff. Let's go ahead and play this little clip, right? This little section right here, specifically on, hey, maybe this is kind of a fake out, because what happened at the FOMC meeting and what's expected to happen at the upcoming central bank meetings for the rest of the G7 isn't really expected to change, well, our expectations of the future going forward. Until we have more significant economic surprises, continuation was the base case, right? A neutral move, maybe with some positive or negative drift, was the base case. Not just a strictly directional, more volatile move than kind of what was expected and that we actually got. So let's hear the case for this being a fake out.
For me is, even though the market took it as super dovish, you know, the interesting thing for me is, even though the market took it as super dovish, you know, I can't sit here and say that the market can't continue to rally, but there's something in me that, and maybe it rallies for a week or two. Remember, I said last week at our weekly update, perhaps at this week's Fed meeting, Powell would be not as hawkish as expected, and therefore we might get a couple weeks of a bounce. So I'm really interested to see whether we got a couple hours worth of a bounce or whether this turns into a couple weeks. Regardless of which it is, I just don't think the worst is necessarily behind us. I don't think we're going to see an ultra dovish Fed going forward unless we have further downside in equities or higher volatility, or however you want to describe a higher volatility environment. So the most interesting thing for me, or the thing I'm most curious about, is, again, whether this bounce lasts for a couple weeks or a couple days, or whether it's over by the time we come in tomorrow morning. And I just don't know. I lean towards the fact that we could very easily sell off into the end of the week, especially when we have non-farm payrolls. Because again, he was very clear, we're still data dependent. He wasn't ultra dovish, he just didn't say anything really hawkish. And as a result, I think, and we'll see if I'm right or not, but I think the market kind of heard what it wanted to hear. So to me, the next couple of days are going to be really interesting.
I 100% agree. I 100% agree with this. I'm already thinking about how this, I mean, thankfully, I risk managed my trades here. I'll go ahead and move this over to the side because I'm pretty much done now. I mean, we can have financial juice open over here on the side, maybe. Okay, there you go. Got a little financial juice going. Let me show you guys something. So yesterday I had these trades going and I got stopped out on these. I'm like, oh no, that's hard. But I still had this long trade going. I was super happy that it was up 60 pips. I was happy about this buy. I was happy about that buy. And especially catching that little bottom wick, right? And taking it all the way. I was like, oh man, you know, all this is just gonna blow over. We're gonna just keep going higher. And then I'm like, uh-oh. We had a really bad open here on once 2 p.m. came around and the next trading day came around. That was a really bad open. Like, I thought it was going to come down a bit and give us maybe the low wick here or here and then start going up. But as soon as I saw this bar, I'm like, oh man, I need to risk manage this. And I got out at this little red line. And that was the right decision. That was absolutely the right decision. So net, the trade did fine because this was a pretty good size. So I didn't lose a net. You know, I lost money on this trade. I lost money at that trade. I didn't lose money on this one. So it was up, but not by a lot. Like, it's kind of the same situation I had with Aussie dollar. Like, all this week I've been just getting... I've had really good spots. Like this one, that's effectively how this one played out. I was all the way down here, and I was actually looking at this on the week, and I'm like, you know, it'd be a really good spot to take profit on the week. And because we were going into FOMC, I'm like, you know, even though there's an RBA rate hike coming along, I'm not still totally sold on the expectation that the Australian economy will outperform even after they do that hike. Now there's some commentary saying that the RBA may need to do multiple more hikes. Youch. That could really make like Aussie New Zealand move quite a lot based off the research I've seen for that. And you can see my expectation was, yeah, go lower. That was wrong. See, look, it's fine if you're wrong. And I got stopped out here for like $2. Like I made like a fraction of a pip. I'm like, but you know, thank God, because if you look at this chart, like, you only have to be away from the chart for 2 hours and have this whole thing totally move against you. So I did the right thing in protecting myself there. All's well that ends well. We can delete that. Turn on these low odds, and you can kind of see why I was like, you know, that's probably an all right spot to be taking a shot. I think, did I have auto? Yeah, you can even see it there. It's even, when you turn off that auto look back setting that I just did, it uses more short-term data to fit, so it uses a shorter fit. But I try to keep this on nowadays, but still tapped it. I'm like, damn man. Good spots. And then how do we do today? Yeah, probably would have been stopped out on that, on a short from there. Yeah, that is not, today was not a fun day for a lot of people. Little volatile smash. Just got smashed by oil. Let's do CL, crude, because we got some news in the commodities channel on crude. Yeah, check that out. This is for the day. And you can see how oil rallied post FOMC. But during FOMC, it got hit so hard. Let's see here. 12. Dude. Oh, man. Good spots. Good spots and good shots on oil. Yeah, we got some U.S. offshore wind sector fundamentally broken. Crude oil slight uptick amidst seasonal trends by Seb. Yeah. Let's look at our closing odds here to see how the week might end. Yeah, if I could put something in, I'd probably say just a bit more. I think by the end of the week, we'll probably be above 83. Month and then day. Yeah. I think we'll be above 83 by the end of the week. And then how about for the month? Yeah, we are kind of sitting in nowhere land right now for the month. Yeah, I wouldn't be surprised to see 85 at some point, and I wouldn't be surprised to see 78 at some point. Those are just peaks in the distribution. Let's move on to DXY here. Let's do a quick little review of what happened yesterday. So my expectation was up into FOMC, and then a slight positive neutral drift. And then the dollar rolled over a lot more than was expected. A lot more than what was expected. So, what's kind of the deal here now? Are we at a likely low? Yeah. If you took that shot, probably pretty happy. Let's check out some more of these dollar pairs. Yeah, I don't have my entries highlighted here. Let me turn on the global. So earlier in the trade group, I took this spot here. And I'm like, you know, this is probably a good spot on New Zealand because New Zealand doesn't have the same rate hike expectations as the RBA. So let me go ahead and in the trade group, just show my thread here. There you go. 6:02, so about 3 hours ago, 3.5 hours ago. Monthly swing potential. So I went ahead and I added short here. All that sort of good stuff. And you can see that's roughly around the same spot. If you look at things on the monthly range probabilities, you can see that's the peak in your distribution for the month. So I went ahead and I took a shot there, and I think I lucked out. I really think I lucked out. It's during these sorts of situations where it's like, well, how do you know, Joe, that that was going to be the top there for the... Like, you don't. You don't. You see these? What are these numbers? These are percentages. These are probabilities. If I go here to this bin's probability where the top was for the day, or for this spot here on the monthly. What is it? 33... Actually, no, it's only 61% of the time do you go above. So 40% of the time, the top is in for the month below these prices. 60%, 61.777% of the time, the top for the month comes in above here. So the majority of the time, this is wrong. If you just take into account all the tops from all the months and you create your probability distribution, this is the wrong decision 61% of the time. But because I read research, I know what's going on in New Zealand. I mean, if you want, you can just check out in the Discord under the announcements channel. There's this research roundup that I do. And you'll see, like, hey, rural economic note, dairy sector debt and resilience outlook by ASB. We go there. Wait for that to load. Rural economic note, agri-sector resilience, a key focus for the RB&Z. So if we click on that, oh, there's ASB's note on the dairy market, which is one of the biggest commodities in New Zealand. Quote, the RB&Z doesn't think a single season of high debt servicing costs and low milk price will trigger widespread distress, but the challenge will come if dairy prices remain soft for a prolonged period. In this note, we reiterate our thoughts on how farmers can build resilience into their business. The RB&Z released some analysis focused on the resiliencies and vulnerabilities of the agricultural sector. So let's go ahead, click on that, see what the RB&Z is concerned about what they identify in their financial stability risk and policy assessment. By the way, if you go back to the Discord under central banks, and then you scroll up, let's see here. I'm pretty sure I posted it. Yeah, there it is. Financial Stability Report Media from the RBNZ. You can click on that, and then this is the video of the RBNZ talking about this report. Look, this is a lot less, trading is a lot less about can you gamble away your life savings and more about do you actually understand what's going on in the world around you? I mean, seriously. It's a lot easier to get better at trading when you're like, oh, you know, this is a likely top for the day. I don't have good future expectations for the outlook of the New Zealand economy. On a relative rates basis, when you look at the rates between Australia and New Zealand, and then the future curve of those rate expectations. So what's the hiking path? It's not so great. So if you go to like Aussie, New Zealand, wow, check that out. Big red candle there, probably at a top for the month, unless the thing just runs. This is a pretty flat distribution, to be quite frank. Yeah, it's effectively a little bit more guessing involved here. That ain't the easiest thing, because effectively what I see is the distribution. I see a distribution that looks like this, right? Where you have like a pretty wide peak here and a very pointed peak here. And when you have these wider bands where the distribution is kind of more spread out, that's a higher degree of uncertainty of where your true value is going to be, where the realized value ends up staying. So you are taking bets. You are approaching these things probabilistically. So do you go in, not financial advice, quite literally here, because I don't know your situation or how you're approaching things. But the way people approach trading with putting 1% of their account, risk per trade, it doesn't work in a world where the market you're trading is a chaotic system, which, just a little bit of education, a chaotic system is where you have some sort of environment that is very sensitive to the initial conditions, where a tiny change in those initial conditions can result in wildly different outcomes. That's the whole butterfly effect, the whole theory behind the butterfly effect. Markets are a chaotic system. So it's okay to have this be a general expectation, but then you have to just rationalize and say, well, why would I have the expectation that Aussie dollar would go up here? Well, because Australia's rates are forecasted to go higher. They're expected to do even more tightening than they were anticipated to do like a month ago. So the price of Australian dollars on a relative rates basis is becoming more attractive. And Forex is a relative game. That's why it's also important to understand how growth inflation matrices work, figure out the growth inflation of one country versus another. That's the whole quadrant system that a lot of people like to use. There's billions of dollars that go into making really good growth inflation matrix models effectively. Oh man. Good stuff. Man, I've touched on a lot of different topics here. I haven't gone terribly deep into these things yet, but you guys know that over time, even if you're in the trading group, you can just ask me these things and I'll go on and on and on about it. And when it comes down to these streams, it really depends on my mood and it depends on the questions you're asking and how everyone is in the chat. Again, thank you guys for watching. I'm very glad that I started streaming again, just before FOMC, because now it's like my view count is back to like 60-50% of what it was to when I stopped streaming. I really got to make sure I stay on top of this and I don't take breaks that are literally a month long. I'm still new to this, guys. I'm still relatively new to this. Let's see here. Why is NZD so strong? It's just a dollar thing. New Zealand dollar, it's just a dollar thing. This is not a New Zealand thing. This is a US dollar thing. Again, the best explanation comes, I think, from this little section here. More pump or fizzle from this outlook. And I think if you want like the direct link to it, let's see here. Did I post it in the general chat? I'm pretty sure I posted it in the general chat. No, not yet. Crap, where did I post this? Central banks? Yeah, I posted it in central banks because the title has Powell in it and it says Fed pause pump. Yeah. It's right here. So it's like you scroll up past these little podcasts here talking about the Fed. M&I is really good to listen to. I still haven't listened to this podcast yet, so I don't know if it's any good, but M&I's got really good research. And then there's this oxymoronic, and it's this Bloomberg article. Actually, let's read this right now, because I have a feeling based off this Bloomberg title, it's very similar to the sentiment given in that episode. Powell touts tight financial conditions, causing them to loosen. It touts tight financial conditions, causing them to loosen. Financial climate had turned more restrictive in recent months. Talking is supportive. Way loosens conditions. Am I not logged in? Oh, hold on. I'm not logged into my Bloomberg.
So the topic about which I've been asked to speak tonight is...
Yeah, we don't need to listen to that guy. Let's have financial juice open in the meantime while I sign into Bloomberg here. And check the poll. Oh, wow, 5 votes. Yeah, you guys really like the stream layout. Thank you. All right, there we go. We are signed in. Now we can read the article. Let's see here. The problem now. Fed officials risk a no-win position if the financial climate eases materially on expectation, arguably stoked by Powell, that the U.S. Central Bank is now done with its aggressive tightening campaign. I mean, I don't get this. Yeah, they're done moving the rates higher, but they're still doing quantitative tightening. They're still letting their treasuries run off. One problem I think the chairman has at this point is by talking to markets in a supportive way. I don't think he was... See, this is what I really agree with from Johnson. Like, I don't think that Powell was talking supportive at all. Like, it was very neutral. Stocks rally, bond yields fall. That was kind of the big move from yesterday. That's loosening financial conditions. This could induce more U.S. economic outperformance, this little pullback, if it continues. And then result in the Fed actually having to do the hike in December. Oh, man. That's removing some of the restraint that was creating some impetus for not tightening monetary policy. Let's see here. The implied downside risk to growth might be underestimated, especially if the rise in financial stability risks is not fully captured by equity or corporate bond market moves. Yeah. I mean, if the Panama Canal stuff, for example, adds to a surprise out of somewhere, who knows where. Again, I'm always going to be looking for more analysis on that point. Then, yeah, I'll be very, very happy about that. All right, I think I've covered pretty much everything I wanted to when it comes down to this stuff here. We can close that. If you guys got any requests on charts you want me to go ahead and look over, or if anyone from the trading group wants to hop into the voice chat here, the daily plan chat, you can come in. And FYI, the daily plan is open. You can just hop on in here. You can come and say hi and chat in real time. So we'll give that a few minutes, see if anyone's got some charts that I can pull up and give my thoughts on it. Otherwise, today is a pretty straightforward stream. I can get to programming. The pound dollar, please. Yes. So, oh man. Oh my god. Oh man. Oh, hold on. I have to double check something. I have to double check someone's trade in the group chat, in the trading group. Oh man. Yeah, looks like that probably got stopped on this one. I was saying earlier on in the stream, like, yeah, if you took a spot here, you probably got stopped on that. But this is why. See, if you got short in there, let's see here. You're putting your stop in the trough. So you get stopped out here, but then you see this, and it's like, well, time to take another shot. And then you put your stop at the edge. I think that's the spot. Yeah, that's actually the spot. So somewhere around here, depending on what time you're looking at it. And that would go down to right here. So this would kind of be your risk to reward. You can kind of see how that ratio changes. So somewhere around here, yeah. This is why it's useful to always be taking little shots. And it's okay if those shots get hit. It's just, you know, risking 1% risk per trade. You can't take very many shots without getting wrecked. Man, oh man, what a nutty trade on the day. Well, let's bring up, actually, let's look at it for the week, how the week's gonna end. You're on our closing odds. Wait a second. Oh man. Oh, that was the peak for the week too, huh? Oh man, Pound had one of the best setups, huh? Yeah, it'll probably have a bit more of a positive drift. You can kind of see there's kind of this bullish closing spot in the distribution and this bearish closing spot. So it'll probably close around 122. If I mean, I'm just looking at the distribution saying, hey, you know, this is the biggest probability. It's around 122, maybe just a little bit below it. Yeah, I'm a man. Really, you were able to get out and that's cool. Oh, I think I know how you did that, right? On this dip, you put it into break even, right? On the dip, you went break even. That's how I saved myself on Aussie dollar, right? I had once we were down here, I'm like, okay, break even, see if this thing trends, and then in 2 hours reverses. Saves my. And then on USD CAD, this one was set a bit higher, and then I took shots here and a shot there, and it didn't go. Like, these are really good stop placements, man. These are really good stops. Yeah, man. I'm glad that I called it. I mean, what's nice about this way of approaching things is that everyone, like, there is a way you can interpret these things that everyone else has the same interpretation, if you know what I'm saying. Like, interpreting statistics is pretty straightforward. There's, okay, here's the range of outcomes you can work with. Here's where things become very certain, and here's where things become more uncertain. And you never take those certainties or uncertainties as guarantees. So you do what you can to protect yourself. And it leads to you just thinking more about how to position yourself. So like, okay, if this doesn't work out, what's the spot to hop out? And it's like, oh, it becomes a little more. Don't get me wrong, it still takes some thought and some processing to figure out the spots to get in and out. But it becomes a little easier to figure out generally where those spots are. Like, you never have to be 100% pinpoint accurate in trading. Like, it's nice to have this sort of trade or this sort of trade where you're, picking off wicks, right? Buying bottom wicks, selling top wicks. It's always nice. That's great. But it's not a requirement to be making money. It's just not. Some people trade at the open or the close, right? I mean, wow, man. Yeah, getting out right here from a short there, and then, man, it just really would have been, yeah, it is very much educated guessing, which is why you can never. I can never say any of this is financial advice, or we're literally just interpreting a statistical distribution and figuring out, okay, what are the most likely scenarios probabilistically, and then how do we conditionally weigh those based off our own discretionary decisions from the research that we're reading, from the things that we know about the world. And, of course, from a lot of that research, they say, hey, this research isn't financial advice either. All of the financial decisions have to be your own autonomous decision, because no one else can take responsibility for the money that you have other than yourself. Like, if you go to a financial advisor and give them the money, all's well that ends well. But I am never going to be telling someone, oh, take this trade, oh, take that trade. I'll say, I don't know if I would have done it. I'm giving my own personal commentary and opinions here. And I'm just very transparent, like, hey, we are dealing with degrees of guesses and probabilities here. A probability and a certainty that I interpret as a certainty might be more like an uncertainty for you, because you might have more information about a topic than I do. Like, there's a lot of guys who trade commodities in the trading group who are arguably better at trading commodities because they know more about the commodities market than me. And I'm very happy that they know more, because I get to talk to those guys and I get to learn a little bit more about their world. I'm very, very happy about that. Very, very nice to have that kind of diversity of thought. And you only get that when people are able to, with some degree of self-certainty on their own end, have their own autonomy in the research and the decisions that they're making. So I'm always very happy to have that. Now, man, it's just like the king trades in my book is like, you get short there, the thing does this rip back, you're out at no loss, then you see the thing move higher, like, huh, okay, I'll have another one of those, and you take another shot, and the thing just oh man, that would have been great. That really would have been great. All right, let's see here. I still see you. BTC USD. Let's go. Yeah, Bitcoin has less interesting distributions, frankly. Right? You can see how they kind of have more wide bodies here. At least the interesting thing with this indicator is you can actually see how the tail risk comes in. Like, look at this monthly spot here. Like, here's your upside tail, and then look at your downside. Look at that downside tail. Oh man. Oh man, that's at like 2,500. Dude, that is a pretty nutty tail. And this is on a log chart too. Man. But you can see there's a bit of a peak here and a bit of a peak there, so I don't know. When I look at this, I do see something, right? You got something there, and then you got something that looks a bit like that. So you got a bit of a trough here. I'm just visually inspecting the values that I'm reading over here, right? And you can see how the numbers get smaller here, and then they increase for a bit here, and then they start falling over here. That's why I'm like, huh, there's a peak. And then you can visually see how there's a peak also. Yeah. I don't know, let's just see how it performed in the last month, right? Because we had this huge run up. It was a bit off. A bit off. But you can see right there at that first jump up, people were taking shots at this spot right here. And then as it kept going higher, see, this is actually a bit similar to that pound dollar daily trade. As soon as it started going up a bit higher, it's like, okay, all the trades here, you gotta hop out of the water here. But then there's this thing where you have these low probability trough spaces, and there's shit like this. Like, you see how it just runs through the lower probability space and goes to the next most likely spot? So this is a distribution of where usually tops come in. So the fact that it remained sticky for the rest of the month, that's... yeah, man, that was a pretty strong month. Oh, wow. Check that out. So this is the distribution of closes on Bitcoin. That is one skewed distribution. Check that out. You got this tail, and it goes do, and it stays strong here. Then you got a bit of a bump, bit more of a bump. That's your peak. And then it falls, and it gets super small. So actually closing up here, this is like at the edge of your kind of more moderate probability of your distribution before you get into this tail here. That's kind of interesting, that shape. Yeah, it's kind of an interesting shape. Yeah, that's definitely a skewed distribution. But it's nice to actually have an indicator that it's like, oh yeah, this is a skewed shape. Very, very nice. Very, very nice. Okie doke. And here it is for this. All right, well, we've been going on now for officially an hour. I think now it's a good time to end the stream. I'll still be in the Discord hanging out, and I got to get some programming done because the next update for range probabilities has a whole lot of quality of life enhancements. I really want to get this update out. I really want to use it so badly. I use these tools almost every day. I really look forward to the next update and giving you guys access to it for sure. And if you want access to this tool, the links to it's in the WAP store. You have to join the trading group. It's $100 a month. But yeah, definitely check it out. You pay for access to the tools, right? And the trading group. Like, there's a lot of groups where it's like, oh my god, I've seen guys pay. Like, I mean, I was one of those guys where I would pay $200, $300, $400 a month, and I'm like, this is way too much. $100 is fine. $100 is fine. That keeps me going. That keeps the development smooth. All that sort of good stuff. But yeah, if you want to hang out, use these tools. There's also a 10-day trial. So definitely check that out. If you just want to try this out and see if, like, okay, I can do the $100 a month, but I really want to make sure, like, I'm comfortable with this. Just do the trial. Do the trial. We'll hang out. We'll go over this stuff. I can show you how to use this in like 30 minutes. It's just statistics. Alrighty, you guys. That's the cue. I'll see you guys in a bit tomorrow.